Hello dear traders, I'm Anna Kasatkina. You're watching the latest financial news on Insta TV. In New Zealand, exporters asked the central bank to take measures to reduce the national currency rate. The New Zealand dollar hit a new high against the Australian dollar that led to the decline of demand for the New Zealand products. The New Zealand Manufacturers and Exporters Association warns that if the market situation does not change, the country may lose thousands of jobs. In February, exports dropped by 13% or 608 million New Zealand dollars compared to the same period of the last year. Imports advanced by 4% and the trade balance amounted to $50 million, which is much worse than expected. Nevertheless, analysts suppose that the producers' request will not have any results. Westpac expects a short-term rise in the New Zealand dollar, and NAB forecasts the depreciation of the New Zealand versus the US dollar pair as early as 2016. The Reserve Bank of New Zealand is likely to go on trying to cut the national currency rate using verbal interventions. However, the regulators' words about overrated and overpriced currency do not provoke reactions anymore. After the weak report on the trade balance, the New Zealand versus the US dollar pair slid by 0.3% and traded at 0.7631. From the beginning of the week, the quote remains in a narrow range. In New Zealand, the key interest rate is 3.5%, which is much higher than in other developed countries, but the analysts do not expect softer policy. First of all, last year the RBNZ was actively increasing the key interest rate and is unlikely to admit the mistake. Secondly, there is a serious risk of overheating on the housing market. However, the central bank may change its point of view if inflation expectations fall to critically low levels. So follow the latest financial events together with InstaForex's team. Thank you and goodbye.